So the first category is well-connected routing nodes. Now, this is something that I've debated with very, very smart people that I respect. And again, I think we could take either side of this argument. But one analogy that I've been thinking about more recently is thinking about the Lightning Network as sort of analogous to the railroads. And so, when we go back to the Gilded Age in the United States and the building of railroads and all of that, obviously some of the wealthiest people in human history came from that boom. And I think this is similar to that. It's a transportation network. As Lightning Labs always says, it's money tubes. Bitcoin is money. This is like the railroads or the tubes to send the money around the world. And so I think that, I think it seems pretty intuitive and obvious to me that if you own the Grand Central or many of the major hubs or routing kind of rail stations for that, seems like that's going to be pretty valuable. I think the debate is how much staying power these rail hubs or these routing hubs are going to have, and also how decentralized routing is going to be in the future. So I'll take each of those one by one. One question is, so if I were to take the bear case on having staying power with these major nodes today, it would be that unlike physical railroads, it's much cheaper to lay Lightning track, i.e. it's purely digital. All I need to do is open the channel with a Bitcoin transaction. Probably true. So it's probably much easier to build Lightning railroads than it was physical railroads. However, no one knows what the future cost of laying track is going to be, right? And so it's cheap today. The mempool is empty. But if you see a possible world where the entire global economy comes over to Bitcoin, then who knows how expensive it is to get a transaction in the mempool, right, or to get a transaction through. And so, I could see easily a case where it's thousands of dollars, maybe much more, to lay some of this track, in which case it's going to be much more expensive than people realize to build up some of these well-connected nodes. I think there's also just a lot around brand. Like I thought it was interesting, for example, zero routing fee, I think just kind of went down, started up a new node, and because people knew him and trusted him, he was able to build that up again pretty quickly, again, in a low fee environment. But I think brand does matter a lot. I think also connections among a lot of the big players matter. So if if you're well hooked up in sort of like the legacy financial system, some of these companies like Rivers and Krakens or whatever, I think they're going to be pretty well positioned for that. So I think you could take either side of that. But in general, if we're taking the entire payment network of the world and moving it over to Lightning Network, I think it's just like pretty obvious if you're routing a meaningful percentage of those payments, it's going to be valuable. Now, I think, and we'll touch on this more later as well, but another interesting question is, what is the value created versus value captured there, right? And this is something I'm sure we'll go into much greater detail on, but very high level, there is a world where we create a ton of value. By that I mean we basically route payments for very, very, very low fees, and so everyone in the world benefits from that. It's free, instant, frictionless commerce. But then you say, well, those nodes, if they're routing at such a low fee because the market clearing price is so low, well, then how do they make money? Like, what's their take rate? And I think one interesting model to consider around that is that the take rate could be substantially lower. Like, let's say, whatever it is today, a couple percentage points, maybe it's only 0.1 percentage points or whatever. I think it's probably higher than that, but who knows? But when you have 8 billion people one day that are able to engage in global commerce, the vast majority of whom today are just completely shut out, and you have all of these new different kinds of commerce that are enabled by the Lightning Network, things like Stacker News, et cetera, which I'm sure we'll talk more about, then all of a sudden there's another argument that says even if our take rate is much lower, if we can increase the pie of global commerce by orders of magnitude, well, even a much lower take rate is still potentially more profitable than some of the Visas and MasterCards today. So that's my kind of general bull case. I'll pause there because I know there's 2 more categories, but yeah.
Yeah, so it could be a bit of a volume game. It could get to the point where we have this massive pie and it's okay that the take rate's smaller because there's so many more payments flowing through.
Exactly.
How important is skill? Because we talked about brand and reputation. What about the actual skill of a routing node operator? Is that going to be an important feature in determining which routing nodes are successful and which ones are not?
It certainly is today. I don't foresee that changing anytime soon. To be clear, I run a cloud node. I run an Umbrel node as well, and I'm pretty hands off. So I would say I'm a objectively terrible node operator. But even still, I get a little bit of routing. It's kind of cool. It's kind of a fun little thing. But yeah, I mean, I mean, again, it remains to be seen with developments in the network what the scarce skill set is going to be. But my guess is that there will still be a decent amount of skill. The other thing that I would just mention that I also should touch on is it also matters a lot how decentralized routing is. And so if we get much
Hmm.
more of a hub and spoke model where vast majority of payment volume is flowing through some of these big nodes, well, it's going to be hard to compete against them because of economies of scale, because of the skill they have, et cetera, et cetera. However, if some of this other stuff, and this is kind of stretching my expertise, but I listened to your podcast with Renee talking about some of the multi-path payments and stuff like that. If there's a world where it's a lot easier to split payments and make it easier for smaller nodes to route, maybe more passively, then maybe that's kind of a shift more in the kind of democratized routing world. At this stage, I don't think anyone knows. It's kind of anyone's guess.